Hello everyone, welcome to today's webinar, being the client of choice in a capacity constrained market. Today we are hoping to discuss what client of choice means, gain a better understanding of different perspectives through our panellists who have joined us today on both client and supply side, and explore some of those key challenges that the suppliers are facing in selecting preferred clients. I'd like to start by introducing myself, my co-host, and our wonderful panellists who have joined us today. So my name is Briana Lee. I'm a principal at Efficio and delighted to be joined with my co-host Mark Bevan, who is the Vice President at Efficio. We're also especially pleased to be joined by our panellists of experts today. So we have Richard Stuart, who is the Director of Asset Delivery at Yorkshire Water, Grant Packham, who is the Group Commercial Director at JSM Group Services. We have Mark Borland, who is the Commercial Director at AWE, and James Cotter, who's the Managing Director for Substations and Renewable Connections at MGroup. So thank you for being here today. We really appreciate your time and we're looking forward to a great discussion. Before we do get started, I just wanted to cover off a few items for our audience so that they know how to participate in today's event. So you will have the opportunity to submit questions by clicking the Q&A button on your control panel at the bottom of the page. Please do so. We're eager for this session to be as conversational and interactive as possible. Now I know it's virtual, but we will see how we go. You can send in your questions at any time during the presentation. They can be anonymous if that is your preference, and we'll be monitoring them on our screen. So we may address some of them during the discussion if it's appropriate, but mostly at the end of today's webinar where we'll have some dedicated time for Q&A. Wonderful. So with intros out of the way, I'm going to hand over to Mark. Mark's going to lead us into the discussion by just giving us a bit of an overview of the market landscape and where we're seeing some of the biggest shifts right now. Mark.
Great, thanks, Briana. So let me just take a few minutes to kind of frame the subject that we've chosen to address during this webinar. I think as everyone joined probably has an interest in this, we're in a period of huge infrastructure investment. I think today we're going to be talking about the UK, given our panelists, but I think what we'll discuss today is really very relevant globally as well, both in Europe and beyond. And I think this investment is across the board. We've got the great grid upgrade in power, we've got renewables investment, we've got nuclear power stations being built. We've got the biggest AMP periods in water to build resilience in our water provision, and then transportation, and then kind of smaller things, house building, to cover our the more personal infrastructure, the housing shortage, those types of things. And what does that mean? Well, all these projects and all these programs are going to pull on the same resources. We're going to have labour and skills shortage, and we're all going to be competing for the same plant and materials from suppliers that are still recovering from kind of disruptions in the global supply chain that we've seen over the past few years. The impact of that, I think the supply base is responding. We're seeing heavy investment from the supply base, heavy investment in the suppliers in this space from external suppliers. So they're definitely responding to the demand and putting in programs to grow themselves. But they're also being more choosy in who they work with, both at the procurement phase, but also perhaps being more choosy on how they prioritise the work they're doing and how they deliver the work as well. And maybe that's a subject we can discuss. So to address this, as Briana said, that the subject here is we're seeing clients need to be the client of choice for the suppliers, both to secure the capacity at the procurement phase, but also to keep it and keep up with the challenging programs they need to deliver. I'm going to pause there from me and hand over to our panel and just get their kind of opening viewpoints on what I've just said. So Mark very kindly offered to start. Mark, any views on what I've just said and the kind of the subject we've chosen to discuss today?
Yeah, thanks, Mark. I mean, I think it's recognising there's an increased risk because the buyer's market and the choice, but I also think client of choice is actually how we be a better client. We spend so much talking about supply chain performance. Actually, the client performance is key to get better commercial outcomes. And I think plays into that risk of, you know, the market choice. And I think for me, when it comes to being that client of choice, it really sort of comes down to four key things: is getting better business alignment. You know, the old days of just and reading the requirements and then just guessing it and putting back, that doesn't really work in today's market. So it's really how you get that better business alignment, and that's through better pre-market engagement. And for us in AW, we do a lot of site tours before the tenders go out, so actually getting the supply chain to talk through and meet us and actually meet before the ITT goes out. But it also means more slightly longer interactive procurements, you know, so not going back to the old days of competitive dialogue, actually using the procurement to really discuss what we're needing and get to the right requirements. So really getting that alignment. I think the other key part is that positive culture, and this really is about post-contract management. Of what we want to do is create that positive culture, and I think the marketplace now expect to work with clients that are willing to work in a better culture and avoid that sort of master-slave relationship. But that does mean for us as clients, we've got to have a much better focus on the scope and the requirements. So it's not just the technical aspects, it's about the cultural and the how you want the governance to work and the empowerment you're given to the supply chain as much as what you need technically to be delivered. And we're also seen to be that client of choice is really that shared risk. You know, we are seeing certainly in across defence moving to much more two-stage procurements, you know, a single stage procurement and then just transferring risk. That just doesn't work in today's marketplace. So really bringing in much more multi-stage procurements that allows the risk to be properly understood by all parties at the right stage. And that really helps the supply chain and us understand each other's risks and what risks client is better to manage. And I think that even in practical things of the level of insurance that we might want, actually the insurance market is quite hot at the moment. So working with the supply chain on the right insurance limits for some of the big infrastructure roles. And I think the last one, which has been common, I think, for all of us for, you know, the last 30, 40 years, is a desperate need for stability in what we're doing. So we're certainly seeing in government at the moment a move away from zero commitment frameworks to trying to create longer term contracts that get better pipelines and cash flow. I don't think we'll ever be 100% stable. Government does change its priorities from then, but getting to that more stability certainly makes us a better client. So I think that's the four key things: is if we can understand and get better business alignment with the marketplace, create a scope and a contract that drives positive culture with that better risk profile underpinned by more stability, that's what hopefully drives the right outcomes that we're needing in the procurement and delivery.
Thanks for that, Mark. Maybe we jump to the supplier point of view from Grant. You okay to go next?
Yeah, of course. Thanks, Mark. Yeah, some interesting points there, and I think we all share the same ideals. Is that stability piece for us? And yeah, it does seem like moving towards two-stage tendering is probably a more with the earlier engagement would help de-risk these projects and get them going quicker. Because the earlier we get involved, the earlier we can understand the risks and try and design them out if we can, or at least understand what the potentials are for those with regards to if there's any particular issues with engineering, with particular crossings on things like motorways and stuff. Maybe we can work through that problem together, or spend a bit more time in pre-construction designing those out to find alternatives. So we're seeing that a lot more, because as ever, if you rush into a contract, be it with whoever, it generally you end up being quite disappointed because the outcomes aren't aligned. So that the client's expecting something to be energised here for this price. However, with the risks as they are, if we haven't resolved them and we've got a lot of unknowns or provisional sums or clarifications in there, you just end up having disappointed clients and contractors both sides, because you end up in a bit of a arm wrestle as to who's right or who's wrong. So early engagement, absolutely support what Mark was saying there, because I think over my 25 years, the earlier you're engaged, the more likely you'll have a much more positive and quicker outcome, even if it takes you longer to get started on a project. We know that there's certain power on dates and the like that have to be kept to for various funding reasons, etc. But the sooner we get involved, the better the outcome is big for me. Cash flow is really important. I mean, it'll always come from a group commercial director that cash flow is really important, and visibility of that with regards to aligning payment terms with key suppliers, certainly with the switchgear, the substations, the cables, making sure everyone's happy with how that risk and how the title of the goods passes through the supply chain, so everyone's aware and shares a reasonable burden of that. I think that's key. Certainly with some of the big power projects, the upfront costs can be quite extraordinary, as a lot of us know on the panel. So getting those resolved in the two-stage tender process, in the first stage, to make sure there is no surprises, everyone knows who the key suppliers are, know the payment terms, know if there's any inflationary or fixed priced risks in there with the volatility of the metals that are in all the gear, all the copper, aluminium, etc. So I think that's key, really. So yeah, absolutely support what Mark was saying there.
Thanks, Grant. Richard, what's your point of view?
Yes, thanks, Mark. And I think we're going to be hearing some common themes today. So firstly, to recognise that, as you pointed out, in the water sector, we are facing a period of significant growth. So this next 5-year period, AMP8, the water sector is investing 88 billion, and that's up from 51 billion in the previous 5 years. And in Yorkshire Water, that looks like roughly 2.5 billion in the last 5 years, up to more than 4 billion in this next 5 years. So big period of growth. And I guess the thing about the water sector, certainly this is true with Yorkshire Water, is it's dominated by a large number of relatively small projects, and we don't always have a high degree of certainty as to exactly what those projects will be at the time when we're procuring our frameworks. So that presents a bit of a challenge to us. Now we did do some market engagement before we went out to tender for our AMP8 frameworks. Probably the three big things that came back, the headlines from that market engagement. The first one was stability. So we've heard that already a couple of times on this call, and delivery partners really being keen on a stable workload, for obvious reasons, helping to manage resources, planning, business cycles, etc. Second one, probably related to that, was a clear and committed pipeline of work. And then the third one was a preference for collaborative working arrangements. And one thing that's probably noteworthy is that actually when everyone's known that the water sector is ramping up, lots of people come into market at the same time, and what we found is that the people that were bidding for work with Yorkshire Water were almost all people that we were already engaged with, so incumbent suppliers. And I think there's a message coming through there that the strategy of the supply chain is very much to build those long-term relationships with clients who they've got the relationships with, they know who to work or how to work with. So there's a degree of sort of longer term strategic relationships there. So it's definitely not a time where people are looking to grow through making new friends or working for new clients. It's all about growth with existing clients, because the workload with those existing clients is ramping up enough to support the most of the growth ambitions of those supply chain companies. So I guess the challenge that we've got ahead of us then, and something we certainly saw in the last 5 years, is because we've got this regulatory period, you only know what it is that you've got to spend and to deliver relatively close to the start of the period where you need to be delivering it. And the risk, of course, is then that we spend 2 or 3 years deciding what we want to do and designing it, and then we try and cram all of the construction work and procurement work into the last 2 years. And we're guilty a bit of that in the previous AMP period. And what that means is it puts a sort of exacerbated stress on the supply chain, and that's when things start to slip, timescales start to increase, and people start to fall over. So a lot of what we're thinking about this time around is how can we get more work delivered early in the process, so that we can smooth that profile over the period, and make sure that we're managing that stress and trying to reduce those peaks as much as we can. Easier said than done, because projects do take time to plan and design and develop, especially when you've got affordability and efficiency challenges. So it's not just a case of going and straight away building what was in the plan. You've got to work it a bit. So those are some of the challenges that we're seeing. But of course, working with suppliers who know us, have worked with us before, makes that a bit easier, because even things like design approval processes, standardization, all of that kind of good stuff, it helps when you've got a degree of familiarity.
Thanks, Richard. And finally, the hardest slot, James.
Yes. Yeah. Last, how to add on to that. I think, I think if you look at the context, and you mentioned the context, I think we've all mentioned the context. The amount of investment that's going on at the moment, the amount of change that we see in energy with Clean Power 2030, the ASTI projects, the Great Grid Upgrade, all the work that's coming through those frameworks, combined with investment across the wider energy system, so the unregulated kind of customers and clients who we see BESS, solar, own generation being high, the water industry as well. I think MGroup, we're very, very lucky to be a trusted infrastructure partner across power, water, telecoms, and transport, and we see that investment is just growing across them all. I think the hard part around that is how you balance the ability to be able to deliver that, because if it's growing across the piece, and you mentioned it's not just growing in the UK, it's growing globally. Our supply chain that we go to are working globally as well. So while we try to have and work proactively with our clients on the dates that they want, and I think Grant mentioned there are date constrained projects that we'll all go into. Actually, the ability for us to be able to deliver those isn't just dependent on what we see in the UK market, and I think the risk profiles and how we work within the frameworks, and we work with the clients to understand how that risk pans out, what the deliverability is, because ultimately we're all interested in delivering projects with the right outturn and the right value to the consumer or to our client. I think how we balance the procurement process to get there is really key. And actually, with the increase of work, what we're seeing is a higher focus on competition, actually, rather than a lower focus on competition. And that drives how do you best ensure that you secure the work, but whilst also ensuring that you can get to the outturn the client needs. And I think frameworks are fantastic, certainly in the regulated world. And I think frameworks work really well when the behaviours are aligned. And I think hopefully we'll talk quite a lot about behaviours today, because when you're in a framework and you have allocated work, being able to structure, to invest in people, to invest in skills, and really to make sure that you can deliver is based upon the behaviour of the counterparty throughout, right? So if it's based on trust and based on fair, as soon as it starts to close down and you have more claims coming through, and then the trust starts to lose, and it ends up being adversarial, that becomes very problematic. And equally in the unregulated area, we see a lot of the projects are relatively low margin projects. So they're incredibly cost focused. And again, that brings a different skill set if you want to operate in those markets. So I think balancing the volume of work we see with the skills and the investment we need to be able to deliver that as a UK as a whole, whilst also understanding how and the way that we work is clear. So I think from my personal perspective, having clients that are very clear on their expectations and very clear on how they're going to manage the project, but then more importantly, manage those contracts in that when things start to go awry or badly, which they always will, or when they go very well, they keep that management style going through, because trust is incredibly long to build up and very, very quick to lose. So I'd say, yeah, it's an exciting time, but behaviour is definitely front and centre in our minds.
Thanks, James. I suppose to lead on from that, and thank you, all of you, for sharing those views. I think it's definitely, there are some common themes there, and things that we should definitely dive into a little bit more. And to lead on from your point, James, around, we hear a lot around stability and transparency and collaboration and behaviours and culture. And I think there can sometimes be collaborations thrown out as a buzzword, and what does that actually mean? So I'm keen to get a more detailed view from you all on sort of how do clients build that collaborative solution or culture with the delivery partners, and I suppose, have you seen it work really well, and how has that manifested? I don't know, Mark, or if you wanted to loop back around to you, get your view first.
I think it comes back to the culture and avoiding the blame culture. It's so easy in a heated commercial environment. We're all working together, schedule or cost constraints, to look for who to blame first when things start to go wrong. And I think there's an onus on us as client to sort of step back and actually understand what can we do together to solve the problem, rather than just immediately go into blame. Because I find, and we've seen this in different projects, is when you do that for the first time, the second, third, fourth, fifth time, everybody follows that behaviour, and it immediately looks to who can we point, and that just creates that competitive behaviour. So I think it's up to us as leaders in the industry and to really set the tone from day one in any new contract, that it's about joint solutions and how do we get to the joint. And if the infrastructure programme is easy and everything worked exactly to plan, they wouldn't need all of us in this call and goes round. Infrastructure is difficult, and it's recognising that risks and issues comes up, but it's how you deal with them as a team, rather than immediately looking who do you blame and sort of sit back. And I think but it is difficult in a heated, commercial environment that we all work in from there.
Grant, do you have a view on this one?
Yeah, it's an interesting subject, this one, and Mark makes the point about setting the tone early. That is key. And yeah, I mean, we're all in business to make money, and people fight harder than some, but it's to set the tone and agree. And I know the collaboration word is thrown out probably far too much, and it probably isn't the correct term, but as I sort of said originally, is if everyone understands who owns what risk, and it's clear and it's in the contract, nice black and white, without any really complicated legal language, it's absolutely plain English as to who is doing what and when, then you can avoid all these arguments. The issues come when the again, you rush to get into contract, the CPs and ERs aren't necessarily aligned, there's discrepancies, the contract's got drafting errors, and then you end up with a delay that is no one's fault, could be a third party outside the contract, but then some of these delays, as we know on the infrastructure projects, could be a year, 2, 3 years on some projects, just because you might be landlocked or something and you can't get an easement agreed. But as long as it's clear in the contract, then it's black and white, and you don't waste time arguing about it. And that's key, because you can spend so much time and effort not gaining an awful lot. It's just no one wants to relinquish their position. So that's really, really important. So setting the tone early, absolutely, Mark. Drafting the right contract, I'd say, without a lot of ridiculously complicated amendments. There's a trend in across construction to amend the heck out of contracts, not really for any real reason other than we've decided to try and reinvent the wheel and try and spread the risk in a fair way, but generally it makes it more unfair because the drafting's generally bonkers, because it's been drafted by a very clever legally qualified person, but it doesn't actually reflect the practicalities of what both sides of the contract want. And yes, I suppose it's the type of contract as well, and agreeing how you want to administer that contract, be it NEC, FIDIC, JCT, and setting yourselves up to manage that and administer the contract properly. everyone knows an NEC contract's more burdensome to administer than a JCT. But if you set it up with the right people and the right skill set, NEC works really well at reducing risks and highlighting risks very quickly and resolving them very quickly. But tone's very important. Collaboration's really important, because you need to solve the problems together.
Thanks, Grant. Richard or James, any other comments? Otherwise, we might.
Well, just to say that the program that we're looking at would be very easy to deliver as a series of individual projects, and if we did that, we would miss out on a lot of the benefits of solving a problem once and using that solution many times, or the value of scale. So we kind of see collaboration and working together and good communication as a key enabler to helping us to unlock the benefits of having a big program of work rather than just a series of individual projects. And we have in the SAMP struck out with I guess a little bit of an experiment for us, with a new model for us, which is an NEC4 Alliance approach for our storm overflows program. It represents about a third of our overall program. And what we're finding, it's early days at the moment, but what we're finding is it's the fact that we've built a model that is based on collaboration and requires collaboration to succeed. It's much more natural for people to work together than trying to sort of I guess overlay collaboration as an ideal on an environment that isn't necessarily designed for it. So the things that have helped that to work are governance structures, joint and aligned objectives, and being really clear on what are joint objectives, building the incentivization mechanism around that, having visible and respecting objectives of individual parties that aren't necessarily part of the joint objectives, but they do exist, and being able to have open conversations about that. So I think our aspirations and our early evidence is that when we create that environment, and make sure, I'm not just talking about the sort of the behaviors of people and the governance structures, but also the commercial environment, and then we can unlock more value and deliver more quickly. So key enabler for us, really.
I think from a point of collaboration and the word collaboration, I think we've kind of touched on what's interesting is the behaviour that really comes with that. So when you first get kind of an invitation to tender, and you have a form contract in there, it may say that we're looking to work collaboratively together, and then you read the form contract, and it's incredibly employer friendly, and it starts off with such a strong position that from day zero you can listen to all of the words saying this is what we're trying to achieve together, and you look at the docket and there's a gap between what is let's work together versus a really very strong contract that we would need we need to change or move away from just because it's not acceptable on there. I think what's really important is, if you want to have a collaborative approach as a client, and you think actually the way to get a better project outturn or better value creation is to ensure that when you put things out there, it's middle of the road, it's fair on both sides, rather than it kind of preference on or strong because you think there's going to be a negotiation back. But then when you talk to the internal teams, and I've spent 20 years being on the client side and talked about collaboration a lot, and now I'm on the contract side. I see it from that angle. Having an internal team that is in a way brave enough to say, actually, we're going to put out a contract knowing that it's a middle of the road position, and then we're going to look to hold that because it's all about shared value. It's about value alignment. It's about pain share, gain share, rather than the easy answer internally, which is, do you know what, I'm going to put out something that is a bit stronger because I think we're going to get watered down. Where I've seen it work really well from a client side, actually not the contractor side, is where we had third-party behavioural specialists come into all of the negotiations, and then throughout the execution of the project as well, to call out behaviour that wasn't productive or collaborative against the the alignment that we had agreed up front, and that kept everyone honest within each of the interactions to say, actually, what you're doing there is you're just protecting your own position and not looking at the risk. And they would call that, and they would call out both parties at the same time. So saying collaborative and being open and trusting is really easy when it's going well. It's really tough when you're trying to make the decisions or things start to move in a way you don't want. That's when it really is tested, because it's very, very telling straight away. I think, as Mark said, if the reaction when something goes wrong is to get the pointy finger of blame out and start to argue about that, you've just lost all of your future collaboration in the rest of that contract, because the learnt experience is, well, it's nice and fluffy and warm and we're all working together until it goes wrong and then it's just my fault. And I think having contracts with mechanisms, I always say, as soon as a contract comes out, it's a really bad day in any project. You hope that you can put the contract in the on a shelf somewhere and get on with it. In reality, that doesn't happen as much as it probably should. But the learned behaviour in the first 60 to 100 days of a project, the transition between the negotiation team from a client side to the implementation or the execution team, a lot of the time you're negotiating with a team, they then move on. If that negotiation team have a very different way of working and interpreting the contract to the execution team, again, that sets how you're going to deliver the project. And ultimately, to Grant's point, we're all here to make money, and there's a balance where you say, well, now I'm going to start to exploit this contract in order to make value, and I'm going to deliver at the highest margin, versus actually it's about repeatability, it's about that the long term. So it's really difficult.
Do you maybe this is for James and Grant, do you feel, I think I implied at the start that this feels a bit different at the moment, and all the things you just mentioned, James, it feels like the as suppliers you have a bit more power to demand some of those things you just discussed, and as I said, be a bit more choosy and picky. Is that a fair statement?
So coming in first, and maybe Grant will tell me the absolute opposite, in which case I've got to go and do some navel gazing. But no, not at the moment. Even though there's a lot of work out there, there is a huge focus on, I would say, cost over value is what we feel from the clients, and from even under the frameworks. Sometimes it's, even though frameworks say, well, we've got a portfolio, let's manage as a portfolio. As soon as one project starts to go wrong within a portfolio that might go well, all the focus is on that one project rather than the portfolio. So I think being picky and choosy is driven by the fact we've only got so much energy to invest in trying to win work, and therefore we have to try and select where we invest that energy, because the opportunity, there's probably 10 times the amount of opportunity than we can actually service from just a work winning perspective. But definitely not our experience, or my experience isn't that we're able therefore to say this is what we want to see.
Yeah, and I agree with you there, James. It's always it's as it was. We when it comes to negotiating contracts, there's no, we can only demand a certain amount, but it's not any different to what it's been over the last 10 or 20 years, to be honest. We are always negotiating some very onerous contractual terms, and I think MGroup will suffer as much as we do. We know we need to accept risk because we're a business. It's that level of risk and then the level of exposure if it goes wrong. When you come to, say, LADs and caps on liabilities and insurances, and it's a balance. But I think any business is selective of what they price to an extent, because it costs us money to bid work. We've got bid teams, design teams sitting there, and we need to make sure we channel that resource to projects that we feel we're going to be the highest chance of success. But also then that comes back to, we need to come up with a new term for collaboration. Work where we've got good relationships with clients, and we know that we've had successful projects with them. Those are the ones we're going to be more likely to bid for, similar to what Richard was saying. And we've all got favourite clients, and no doubt the clients have all got favourite contractors that, you know, they've had really successful outcomes. But you're only as good as your last project. We know that, and it is about customer focus and delivery. And I think everyone's saying the same thing. It's that balance of risk. As long as everyone's aware of what that is, you'll have the more successful outcomes for everyone.
I just wanted to jump in and offer a little bit of a counterpoint, because unlike what we just heard from Grant and James, I have seen a bit of flex on the market flexing in terms of terms and conditions. And actually linking it back to something Mark said about good procurement exercises, you know, the dialogue continues, you listen, you accept feedback, you know, you kind of test where the market appetite is. And certainly we found in ambient procurement that we maybe came out with some aspects, some terms and conditions that the market didn't like, or found maybe a little bit too in favor of the client from a risk perspective. But I think having the ability to, through the tender process, have that structured dialogue, get the feedback, understand what the sort of unmet needs that you're coming up against are, and flexing your model to suit that is something that we not only chose to do, but felt that we had to do, because that was the position where the market was. So I think there is some of that happening.
I think there's an onus on the client as well to put herself in the contractor's shoes from then, and understanding their risk environment that perhaps we've just not spotted. You know, from then, I mean, we've got a live issue at the moment on insurance markets, just how, you know, that the insurance bonds and pre-owned just went through the roof, you know, and that's causing a lot of stress from then. So recognising that as a client and actually just asking for what we've always asked in the past might actually be driving cost or stopping bids coming through. But you only understand that through putting yourself in the, you know, the contractors and the tenderers' shoes, rather than just blindly saying, well, our policy says we expect a 50 million insurance bond and that's what we expect. So I think that's where the real dialogue starts to come. But then you need the trust from the marketplace to give you their intel and what's causing the real issues to help. And that's the sort of two-way that we need to try and get to.
Thanks. There's actually a few questions that have been popped in the chat, and I might just draw on some of them now because they relate to the conversation that we're having already, talking to collaboration. You know, we're talking about that in strengthening of the partnerships and alliances. The question here is, a key element of that is pipeline visibility, and I know we touched on that at the start of the session. So I suppose the question here is, how do you share your forward pipeline with suppliers today, and where do you see the opportunities to improve that? I don't know, Richard, if you wanted to give maybe a practical view of how that's happening from your side.
Yeah, so I mean, this is something that we've heard loud and clear, that, you know, is necessary. So one of the things that we've committed to doing for the frameworks that we've got at the moment is publishing our pipeline on a quarterly basis. And we've struggled a little bit in the past because, you know, we're a company that has lots of different programs with lots of different business owners, and some of them like to keep their powder dry on where we want to invest the money. So we've had to make a real effort internally at Yorkshire Water to pull together all of our forecast needs for the next 5 years and get them down on paper. And what we've said to our partners is, look, this is not perfect information. There's gaps in it, but we commit to publishing what we know and working hard to fill the gaps in the interim period. So we've started doing that on a quarterly basis. We're getting feedback on, you know, this is great, but it would be useful to see this little extra bit of information. But it's something that we're committed to, something we're going to continue doing, and continually improve, because really what we need to do is make sure that our partners are able to have enough visibility to be able to resource and plan the work that we're asking them to do. You know, you ask someone if they could have, I don't know, let's say 100 people available to do some work, and I think the answer is different if you're saying, could we have 100 people in a year's time versus can we have 100 people in 2 weeks' time? So the more time that's available with visibility of what you need, then that's, you make life easier for everyone in the chain.
Mark, did you have a view on that?
It's a real challenge for us in defence, but we recognise we've got to resolve it. And the challenges for us, we've got two constraints. We've got a security constraint. Obviously, what we do in publishing long term can create an aggregation problem from a national security perspective. So that drives behaviours. And then we've got a funding constraint that, unlike Richard is very lucky in the AMP world and water, we have an annual funding that can change. From then, so that annual funding and the security constraint is driven in the past some very short-term behaviours in the marketplace because we've not published. But we're spending a lot of time at the moment with Treasury and with defence colleagues to look at how we overcome it, because we've sort of accepted that position for the last decade, and it's just not helping the marketplace invest, plan, and move. So we're really actively looking at how we can change that dial and be a bit more bold on our security, but without obviously compromising areas, and getting a longer term settlement with Treasury colleagues in defence that allows us to really share better market plans. So that's definitely where we're trying to get to. Certainly within our frameworks, we've seen a big step that once you're on a framework, we can actually share a more pipeline and how we're attaching funding. So that's definitely finding better to existing suppliers, but it's not helping for new suppliers who are looking at where the work's coming next. So that's the real challenge we're trying to address just now.
Great, thanks. I'm just going to pause here because we do have a few questions and I'm conscious of time. So I'm going to go through some of them. One that has been submitted is, do you as a client feel like you're in competition with other clients across sectors? And if so, do you try to make your terms better than other clients?
Well, we are in competition in that the regulatory environment within the water sector measures and rewards performance on a relative basis. So how much better you're doing than other water companies. But I think certainly within the world of capital delivery, I think we're probably balanced more towards working together than competing. And the reason for that is that we tend to get our frameworks in place. So we've got our suppliers effectively secured with their regional teams, and it's a case of how can we make sure that we've got those resources in place and we're continuing to feed them. I think the bigger benefit that we can have in terms of unlocking some of the supply demand constraints is the fact that we tend to buy similar equipment, but each of us has our own bespoke requirements and sort of archaic engineering needs, which put a real strain on the supply chain because they're trying to make, I don't know, 10 versions of the same product, but with lots of different bespoke variations depending on which water company they're working for. So one of the things that we're doing, working with other water companies, is to try and harmonize that more. So how can we align what we're asking for to make it easier for suppliers to produce more quickly and productively. So whilst there is an element of competition, I think there's possibly more benefit to be had from working together.
Yes, it's certainly in defence and highways where I worked previously, there's definitely a much more cooperative than competition between the client bodies. There was a real drive to get to standardisation, because we recognise actually a lot of things we're doing, either intelligence would make it better or standardisation would help the market bid across multiple clients. So there's been quite a long focus now to get to standardisation. I don't think we've cracked it. In terms of, exactly as Richard says, there's some things we can go further on in standard terms and getting standard products, but we're moving in that way. And certainly any client I have, it's never competitive, it's collaborative. But we are competing in the marketplace and trying to all secure the best deals and the best suppliers we can. So there's definitely a healthy competition when it comes to tendering, but I wouldn't say it's a strong, winner takes all approach that I can see across.
Yeah. We need to avoid the toilet rolls and COVID situation.
Yes.
Whoever gets to the supermarket first takes it all.
We've just bought a load of toilet roll. That's very depressing. But no, I think what's kind of from my perspective is the competition across sector, because water, power, aviation, a lot of the skills, the core skills are very similar. There's specialties, but very very similar. I think with the volume of work going across them all and a finite amount of ability for the supply chain to kind of service that, I think more and more we're now seeing choice points, and I don't know, Grant, if JSM is similar, but choice points of which is the more attractive market to work in for those skills, and because they are very very cross sector. I mean, 80% of what we do is incredibly cross sector, and the supply chain is similar. Water uses a huge amount of energy. Requires the same kit as equipment as unregulated, battery energy storage, solar. It's all in there. So I think there's an interesting kind of balance to be made. We enjoy frameworks. We like working with them. I think the visibility of the pipeline is good, but only as good as how much you believe that you can secure. And then the question is, on each individual project within that framework, how do you socialize the costs of upskilling and recruiting? And the answer is, under most frameworks, they don't really like that to be attributed to a project. So while it gives visibility of the pipeline out there, it still leaves a problem of, well, there's still risk that we won't secure a percentage of that in some frameworks. Other frameworks are different. But with the volume of work, how do we make that investment to upskill, get the work, the workforce of the future that we need in 2 or 3 years? That's then a risk that the supply chain are taking based upon what they believe they can get from a framework, or unregulated work that's competing for the same things, and then it comes down to a risk reward basis. So it's a real quandary, I think, to move forward.
Grant, any comments from yourself?
No, not particularly on that. I mean, I'll just echo everyone. James's point on the pipeline there, and how real that pipeline is, and that it's more to do with the timing of the jobs, because you'll see a whole selection of jobs in various pipelines, but it's the timing and likelihood of those. But then it comes back to just communication. So it's not just providing a list. It's providing the detail and the context behind it as to the timing of those, when they're likely to land, where they are, geography with the supply chain, because we are heading to a massive ramp up. Everyone knows that construction outputs are down this year, but they're going to ramp up over the next 2 to 3 years in the usual cyclical fashion that construction is. But we do know we face a very real and true reality of the skill shortage that's been building for probably the last 20 years. But the sooner we know about things, the sooner we can warm up our supply chain. Similar to we've got our own in-house labour. We can build and train our workforce to suit. Again, if need 100 guys, to use Richard's example, we need 100 guys in a year's time, fine. If we're very sure about that, we can do something about it now. If it's 100 guys in a week's time, we'll probably struggle to mobilise and train our workforce.
I suppose just following on from that point, Grant, I did want to just switch up, I suppose, just to look into the future a little bit more. And my question, I think, to all of you, actually, because I'm keen to get a view from you all, is what do you see as the biggest capacity constraint over the next 2 to 3 years, whether it be labour, materials, funding? I don't know, Richard, if you wanted to start.
I wish I knew the answer to that, because I could do something about it. I think, I mean, we've got some indications. Things do have a tendency of popping up as the bottleneck when the issue is live, rather than 2 years in advance, so you can plan for it. We can see things like the basic capacity of delivery teams, project managers, commercial managers are all under competition at the moment. We do get some niche ones that pop in. So hydraulic modelers is one that's very common at the moment. Key part of the the understanding what a solution needs to be, and there's a shortage of that expert resource. So that's one example of a live area of a resource constraint at the moment. But overall, certainly from our experience from the last 5 years, where we found that it really hit us is in the equipment. So the water sector has specialist equipment, whether that's the motor control centers that are used to run our plants, or some of the more sort of specialist package plant. That is where we've really seen the impact of you know uh, exceeding the capacity of the industry, and that's manifested itself as with lead times that have gone from 20 weeks up to 60 or 70 weeks. And I think that is likely to be a similar story over the next 5 years. So really that's about going back to the bit about standardization, early engagement, getting orders in early, being clear on demand, all of that good stuff, really just to smooth that profile.
I think for ourselves, it's labour we can see as a real shortfall across the industry. And I think what we're trying to look at is there's trying to get more labour. There's just not enough labour for the amount of projects we need, whether that's engineering, technical, project management. So we're looking at much more how AI, automation can actually reduce the labour demand, because as clients in this really highly competitive market that we've got, we're all asking for the same labour front, and there's just not enough energy time to train the people we need across the infrastructure in the UK. So I think we've got to look at things differently, but that means that the marketplace needs to invest a lot more. So it's how we can facilitate that investment from the marketplace, because unless we can adopt much more efficient automated practices, we're just not going to be able to deliver the level of investment that we need across the UK.
Yeah, I think I'd echo labours and skill is key. I think, well, labour and plant for sure. Funding at the moment doesn't. I mean, it's almost horrible to say, right? But funding at the moment doesn't seem like too much of an issue for the capacity that we have overall in the market and the number of projects. I think it's much more. It feels a little bit kind of field of dreams, right? Build it and they shall come, will come, or whatever the quote is, on the basis of we know we need a lot more skilled people, from designers right now, electrical designers, really hard to come by, engineering, project delivery, linesmen for the overhead lines. We can, as Grant said, we can upskill, we can put that in place, we can start building that, but then if you don't have the signed capacity, you're doing that at risk. And that's the question of how and where, as an industry or set of industries, we can really ensure that we get the growth in the skills we need without it really sitting on the supply chain to take a bet on whether or not they'll be fully utilized in the time periods. Because it's a material cost to have, if you upskill and you get the volume in, and then you've got a year and a half before those projects actually come from forecast today, that's a huge cost to socialize somewhere. So I think a better or more joined up conversation around, for water, for energy, how as an industry are we ensuring these skills are here, so that they can service the projects that we know or we think we'll have, but no individual company's got certainty on yet. That's I think where we need to get to.
And Grant, any final thoughts from you on that one?
Yeah, no, I'd vote for labour shortages, but it's more the skilled labour shortages, and we know it's definitely the more specialist roles that are more challenging to find, because those people will leave the industry and retire if there isn't the workload to feed them, and new people won't come in if there is no workload. But and materials are key as well, and with what we do, we're big on energy, so all the big kit and stuff, people will react. Again, people will react, people will invest, will reopen factories, etc., if they have the pipeline. If not, it'll start increasing costs because it become a bidders war, so to speak, supply and demand, etc. So yeah, it goes back to sharing a good pipeline, having a good confidence or a high level of confidence within that pipeline, that then the likes of a JSM Group, etc., we will invest.
Great, thanks. I have one final question. We only have 3 minutes left, so I'm looking for a quick answer, really, and just bringing it back to what this webinar was all about, which is about being a client of choice. So my question is, do you have one piece of advice you would give to clients who want to truly become a client of choice?
I'll start with, I think, just be super clear on values and behavior and the approach you're taking. Set out, if you're going to be commercially aggressive, risk managed, balanced, cooperative management, alliance or collaborative, just be super clear. Lots of upfront conversations. I think 2-stage procurement is something we'll like to see because that helps us manage the risk. But it doesn't matter if you're commercially aggressive or collaborative and alliance, as long as that lasts all the way through. Expectation management.
I think for me, it's been that honest and authentic. From then, well, all parties, we need to be honest and what risks we're facing and what concerns we've got, and then being authentic and sort of following it through. If we can follow those behaviours, the contract and everything else will follow behind it. But it's really starting from that first honesty and authenticity.
I think for me, it's about communication and, importantly, listening, at least as much as you are broadcasting.
And yeah, I support everyone saying it's honest, clear communication is key for any sort of relationship. So it's just keep it simple and straightforward and consistent.
Wonderful. Thank you so much. A massive thank you to the panel, Richard, Mark, James, Grant. We really appreciate it. And thank you for those who have attended and for those who will watch it.